consistent communication that inflation's still too high. So we do not have an optimal situation in terms of the Fed and the backdrop of liquidity. I think you see that best reflected in things like gold and Bitcoin. So we're seeing some improvement in the price of Bitcoin, but obviously after a 50% decline. And then gold trying to hold 4,000, went parabolic to 5,600, now it's pulled back. I think some of this is reflective of the monetary conditions that we find ourselves in with the Fed higher for longer, which has kind of become the mantra. So let's talk about what broke the momentum trade. Okay, so we have four forces that hit it once. I actually think it's five now that I've thought about it, but crowded positioning. Momentum was the most crowded factor of 2026. When the selling started, there was no marginal buyer left to catch it. We had a leverage unwind. Asian single stock 2X ETFs over in the Kospi. SK Hynix alone held $23 billion and were forced to sell into weakness, feeding a self-reinforced spiral. So you had a massive unwind in the memory trade and the leverage ETFs in Korea. We had a China AI shock with Moonshot's Kimi K3, a 2.8 trillion parameter open model, cracked the assumption that U.S. AI leadership was unassailable. So that happened last week. We're going to talk about that. Spent all weekend kind of buried in that. Macro revival, a 14% oil spike in Iran. Tensions revised a risk the crowd had stopped pricing in, and the June index rebalance spiral was gone. So you factor in those four, and then the fifth for me and all your marginal buyers were in the Hamptons and on summer vacation. So we get one of the great momentum unwinds in history. Several ways to measure it. You got things like Invesco, Dorsey Wright, Technology Momentum ETF. Just went through a 27.5% drawdown in 18 trading days. That's the fastest ever. Maybe only COVID was faster, but faster than 2022. The tariff crash, Fed trade war, China devaluation, and global financial crisis over here. So probably only COVID faster over in that index. Here it is in a different look. Largest peak to trough drawdowns. GFC was 55%. So you're right here at 27.5. You're in the top 1, 2, 3, 4, 5, 6, 7, 8. You're in the top 8 already. This 17-day rate of change in the Morgan Stanley Tech Momentum Factor Index of minus 35% was the worst in its 27-year history. I'll show you this down here. So this surpassed the global financial crisis. This is a momentum factor index that Morgan Stanley has put together, minus 35% in 17 days. Really kind of unprecedented. You can see it visually here better. This goes back to 99, and this is the index's sort of historical return pass, or drawdown return, sorry. And you can see here we are in red compared to the others historically. So the mean sort of looks like this, and this is what you just got. These are all just varying measurements. And I featured at the very top of the show the Goldman Sachs High Beta Momentum Index, down 24% month to date through the first half of July, the worst performance since April 2009. And we just mentioned the Morgan Stanley Momentum Index, 17-day rate of change, down 35%, worst ever recorded through 27 years of history. What that ends up looking like, guys, is this. So you get drawdowns from the highs ranging from 40 to 76%, and all the core thematics that we have traded over the last few years, whether that be nuclear, semiconductors, neoclouds, anything related to space, quantum trade, space again, photonics, drones, solar, all energy, robotics, all storage energy, it's all there, and it's all been nuked, down 70%, in some cases to 40, depending on what you're looking at, okay? Now, as that's happening, guys, the reality is that the spend hasn't changed, okay? So you step back and you say, what the hell is going on? Well, clearly some of this is technically driven, as we've shown you. That's what momentum does. It runs and then it corrects violently. This just happens to be one of the quickest and most violent corrections ever. some of it being mechanically driven. But here's the fundamental story. You've got 27 and 28 total hyperscaler capex, now modeled at 1.2 to 1.4 trillion. Okay, this includes SpaceX for the first time. This was done by Morgan Stanley. Google, Amazon, Softy, Meta, SpaceX. Here they are. This is what they're spending. This is on the books. This isn't not going to happen. And so this debate about the hyperscaler spend and whether or not it's going to happen. Look, you could question 29 and 30, but 27 and 28 is pretty much contractually obligated at this point. So it's on the books. They have the money. It's not like they're going to fall short of the money. In fact, that discussion was interesting that was had. I think anything related to credit at this point, in the hyperscalers is wrong. Maybe Oracle, you could have that discussion, but none of these others, Oracle's not mentioned in here. So none of these others have any type of credit issue. They have no issue issuing stock or issuing debt. So the 2 trillion here, the 1.2, 1.4 added together at 2.6 for 27 and 28. That's on the books. It's contractually obligated. It's going to get spent. Okay. You can question the profitability of what that spend will be, what they'll make off of it. I have no problem with that thesis. You can question, 29 and 30. I don't have a problem with that because at that point they could be questioning the value of the spend, right? So I don't have a problem with that assumption either. I have a problem with any assumption that assumes that this 1.2 and 1.4 trillion is not going to get spent, because it is. So we can go from there about what it means for stock prices. But, our general take, guys, and we've been saying this over and over again, is this whole AI revolution has to become government backed at some point to become a super cycle. Okay. And thus far, this has been private capital that has funded the core of this AI build out. We need, and we'll have the government take stakes. That's been our running sort of, discussion on these calls. This is a U.S. versus China all-in national competition, winner takes all. That just got reasserted with Kimi. Okay. Funding, it should be unlimited. The U.S. has borrowing, unlimited capacity to borrow. So at some point, you're going to have to see that borrowing, I don't want to say be guaranteed, but in some capacity be augmented or facilitated by the government. And then that money is going to flow into these ecosystems. Okay, the bull case here again is this Trump, Musk, Jensen, Altman, Taiwan Semi, Micron. We're just getting started. Scale is going to dwarf current expectations. The market is acting like early internet because it's spooked by the upside. Okay, bear case is inflation ruins the party. We get a bunch of socialist Democrats elected in November, and now we take the other direction and we bow out of this race with China, and we go down the track of Europe. Okay, so what I found fascinating is you had the Secretary of Treasury basically saying that, the Treasury is going to backstop this AI trade. Okay. And he said, look, Scott Bessett's telling you what I've been saying, which is we're headed to 80% of the world's AI compute. Okay. He frames it just like I did, meaning this is a race for compute share and we're going to win, that we cannot lose. Okay. And that, this is sort of a Treasury level conviction U.S. AI infrastructure spend that's going to have to take place to win this race. Okay. And so we as a country either have to mobilize or lose to China. Right. And if you think that, this race isn't real, here you are. Here's Kimi K3 coming in number 1 in front end code arena, beating out Cloud Fable 5 and ChatGPT 5.6 Saw. Okay, I will say I have some asterisks to this. I do believe our leading models probably are now being throttled back because the Chinese are distilling them into Kimi K3, okay, and innovating on top of it. So I'm not sure we are fully getting the fully throttled models anymore. Kimi K3 is open source. Obviously, that brings on a whole new debate, but a lot of people think, this open source thing is going to uh, cause a crash in the AI trade because the cost is lower, it's more efficient, you spend less on tokens. It's actually the exact opposite, guys. It's Jevons paradox. Okay, something goes down in price, it gets used more. All right, and here's the proof. Kimi K3 has received far more love than we expected. This is straight from the source, and our GPUs are feeling it. Over the past 48 hours, demand has pushed close to the limits of our current capacity. Protect the experience of existing subscribers. We're temporarily pausing new subscriptions. Basically, they're just saying we don't have enough capacity. There's not enough compute, period. End of story. So you lower the token prices, everybody uses Kimi K3, and then there's not enough capacity to use because there's more users using. So the logic is flawed surrounding what this means for compute. It's actually bullish. Okay. And the other thing, guys, is you got to realize that while these rankings are real and this is a race, and they are closing the gap, you still have to kind of put all these models to the test in a way that you kind of put human beings to a test, right? Which is when you send kids to med school, you make them take like physics and math, and people are like, why do you do that? They're doctors, they don't need to be able to do advanced mathematics and physics. And the reason is you kind of weed out some of the less bright kids. That's what math does. It kind of weeds them out. And that's what you can do with AI too. So Kimi K3 scores only 39% on Frontier Math, Tier 4, 7% lower than the best US models from 7 months ago. So it's still not on par with our top models on things like Frontier Math. So on the bleeding edge, we're still in the lead. But guys, China's chomping at the bit. The race is real. And we've got to nationally get mobilized. And I don't like what I see politically, and I don't like what I see about data centers being spread. There's a lot of disinformation concerning water and energy consumption. The water part in particular is complete disinformation. The energy, debatable depending on what everybody's grid circumstances are. That introduces obviously things like behind the grid solutions. But, given the news that just came out on Oracle's Jupiter giant data center and its build out and what's happened with the approval of the natural gas pipeline that had to be run to run the BE fuel cells, okay, it got shot down. And this is why you get BE down 7%, Oracle down today, okay? Because a natural gas pipeline that is going to run to the fuel cells to power the Jupiter power center or data center is being shot down. So they're shooting down the off-grid solution build out now. So this is a problem. We have a problem now as a country in that many states have put a moratorium on these data centers. Obviously, this is my opinion because I'm pro data center and I'm pro American. I'm pro perceiving this as a weapons race. I actually had this discussion with my wife over the weekend. I was like, honey, this is a race. This is an arms race, and we can either choose to concede it to China, or we can concede some of our, pasture land to data centers. And here's why we should. So it's an interesting debate. It's going to be had. There's going to be a lot of discussion about Kimi K3 and what it means to cloud and chat GPT, whether or not our frontier models can continue to raise money and funding. So this AI thing is just so fluid. It's going to be a continual slew of announcements every month of something innovative happening, and I think it's going to continue to be very challenging to stay on top of. So come to our calls on Mondays. It's a great chance for us to give you an overview of what's really happening. All right, now let's shift gears. Let's talk the trend and what's happened from price perspective, okay? Because we've got some serious damage just happened to the tape last week. All right, VN has downgraded this market back to 3 of 5 trend models in buy mode. We finally had the Qs and the S&P break the 50-day on the close last week. Now the S&P's back above today, but just barely. You can see it a little clearer on the Qs, the very clear deterioration that we've had since the peak in early June. And you also are challenging the support that we had around 685 after that initial sell-off in June. So there's that 685 it held last week. Kind of a weak bounce today. So, you're still kind of contained by this downtrend line here. Even if we were to rally up, you're going to rally right back into the 50-day. So the burden of proof now is on the bulls to see if they can hold this 685. The Qs are the weak link, right? So you've seen some deterioration in the trend model. One positive is that the 200-day is moving up. So now the distance from the 200-day and the Qs is pretty tight. That's not a bad sign. So this is providing some consolidation that we had described that we wanted. It's probably not as high as we would liked. Let's just be honest, particularly in momentum land, but it's there. I think when you look at the Dow and the Russell, the picture's a little different. We've kind of had these trend channels that we've been in for a few weeks. And those two indexes, you've got the 50-day kind of running underneath the lower side of that trend channel right here, see? And so what you don't want to see is us lose this trend channel in the Dow here. So we're getting close, maybe 515, the 50 days here at 511. So you need to see that hold. You need to see support there, because if you break that trend channel, you're going to get further downgrade in the market. Russell, similar story, right? Same pattern. There's that channel, kind of the lower end, 50 days sitting right on it as well. The channel has been sloppy, right? It's been full of, this oscillation up and down, up and down. So it's not as if this pattern that we're in is really broken per se. But if we don't hold the 50-day here in the Russell and the Dow, obviously you're going to get the double downgrade. We're going to get downgraded to like 1 of 5. Okay, so that's kind of where the trend model is. You need to see this thing hold here this week on the weekly, or you're going to see some more further rapid sort of downgrades in the trend model. One of the things that I'm working on right now, the trend model is always evolving, guys, and given what happened in the market, one of the things that I think led to some excess losses by not raising more cash was that the trend model didn't deteriorate fast enough, because there wasn't enough of a reflection of what was happening in momentum built into the system. So what I've been doing is now beginning to reconfigure the trend model to incorporate a momentum index that will be applied to the trend model. So we're always evolving our systems here. As I sit and I look back, I'm thinking to myself, what would have triggered a quicker downgrade, quicker reflection in the trend models? It would have been a higher sort of reflection of that momentum index breaking down. That would have led to raising more cash. It probably wouldn't have stemmed some of the damage, but it would have stemmed a little bit because we've been more cash. So we're always looking to upgrade our systems, and that will be one of the updates that is going into the trend model. I will let you know how that goes. I'm just kind of beginning the back testing to start that. I don't take it something very nilly-willy. So we'll be bringing some science to it, but we'll be bringing a momentum factor to the trend model to better sort of capture what just played out in our 5 of 5 model, because I don't think it was reflected very well, because the broader index is all held up so well above the 50-day. We just now got the Qs to drop down below the 50, but the deterioration is real, and we have now seen the trend model respond as it does, a little slowly, but at 3 of 5, guys, that changes the game. All right, and you see that other places, guys, where market surge is now running at 40 to 60 exposure. And I'll show you the color guard later on, which is degraded a little bit as well. Okay, but we're in earnings season, so there's hope for fundamentals to come back into play, or at least reassert themselves in the discussion. We got great numbers from all the banks last week, and that set those stocks off. And I think are reflective of a decent economy and a decent environment for financials. Here's that XLF financial select ETF. So this is a broad ETF. We're in a big cut pattern, and we're right at the pivot. The target's up here. So financials kind of giving you the green light. I see some in the near pivot list, and I see some guys out there. If I got any Ameriprise reps on the call, I know I do. Take a look at your stock. It looks pretty good here. AMP, I've noticed it's in a big base, has been for a while, since December of 24. May get ready to break out, all you Ameriprise guys. So we've got results in from ASML that were good, that were solid. TSMC market didn't respond all that great, but not terribly either. ASML still above the 50, held up. Taiwan Semi not quite as good on the reaction, but a better reaction today, trying to get back up above the 50. And in theory, this chart hasn't broken down just yet. Really want to see that lower trend line here maybe hold for Taiwan Semi this week. So watching that chart closely, watching this bounce closely to see if it has any kind of legs. So we got those behind us. The numbers were solid. The response wasn't. But what do we have coming up this week? Well, we've got Intel and Google on Thursday. Those are going to be big because that's going to really talk about where semis are again, where tech is, where the AI CapEx spend. Obviously, Google, a key player in the hyperscale. AI into their business. Texas Instruments also on Wednesday. And we got other financial names, Charles Schwab coming in on Tuesday. So the earnings are continue to flow in. And then next week, guys, will be the big week where you get Amazon and you get Meta and Microsoft. So we're going to have 2 big weeks here now. The beginning of the hyperscalers reporting, more semiconductors. They're spread out all over. And even some cybersecurity names like Fortinet, which has been red hot. That'll be next Wednesday. So software, we'll start to get some updates from ServiceNow, Salty, Fortinet. All this is coming down the pipe. And the numbers should be good. We've been telling you energy is going to lead the way given what's happened in crude. But IT is going to be number 2 right there behind it with 59% expected EPS growth for the second quarter. So red hot. And I think you're going to see it, break down in technology in a manner like this. Semis are going to be the hottest at 100%. IT coming in at 50%, like we just said. So semi's probably growing twice as hot as the sector in general. Semi equipment at 30%. Got hardware, storage, and peripherals. That's that memory trade here at 29. Application software coming in at 21. So software systems still above 20%, even though the IGV just can't get off the mat. Communication equipment at 17, and then consulting and other services the lowest and slowest growing part of the IT stack. Like I said, the TMC numbers were great. Guidance was good. Nothing sort of to think that the spend had slowed down. Here's a trailing 12 months of revenue. It increased by 31% year over year to $140 billion. And, you got B of A out there saying, hey, look, we're growing into 2030. Here we are at 2026. I mean, the growth is going to slow down, but we're double digits all the way into 28. And then even then in 29, a real acceleration. So the banks see this memory and semi trade continuing, guys. On the back of the hyperscaler, spend, even though it's going negative. As I said earlier on the call, there's plenty of room to raise capital via the debt market and or equity sales. But we are sitting at what are record low valuations in what many would consider, the heartbeat of the AI trade, which is NVIDIA, and the tech stack, which has earnings growth that we just described to you coming in, number 2 behind energy at 50% this quarter, coming in at a price earnings ratio at about 20 times, below the 5-year average of 25. So earnings have grown so rapidly that even as stock prices have risen, multiples have compressed. And as I said on the last call, we have had a pattern of underestimating earnings growth for the last few quarters. So it'll be interesting to see if we do it again in Q2 in 2026. Here's this huge bar that everyone's expecting. So if we get big beats and big numbers, it's going to be really something to hold. This earnings season is now really going to be in focus given the technical damage that we've seen to the tape. And we've got a lot to watch. So let's look at some of the things that we're talking about here that might be signs that we could be getting close to the end of selling in some of this tech. Hedge funds have now sold information technology stocks in 6 of the last 8 weeks. Brings the 8-week sales to the largest in the last 10 years. So last week alone, tech was the most sold U.S. sector among hedge funds. As a result, tech exposure as a percentage of total market exposure is down to its lowest since February of 26. Basically, all the hedgies just puked. So that hopefully is a sign of some cathartic release in the market from the big boys puking at the bottom. At the same time, I've got GPU rental rates rising and semiconductors doing kind of what they do. So, this was an interesting chart going back to 2018, showing the biggest drawdown in every calendar year in the SMH. And in 18, it was 29%. In 2019, it was 20%. In 2020, it was 37.8%. In 2021, 18.1%. 2022, 49.1%. 2023, 16.4%. 2024, we had two, one at 18.1 and one at 29.6. In 2025 at 37, and here at 21.4. Now, this tells me a couple things. These corrections of 20% basically happen every year. Now, the question is, does it continue? How much further does it go? Do we get a 30-40? Or did we just get this really quick mid-cycle sort of mid-year sell-off into the summer doldrums that was driven by a massive margin call over in Korea where 6% of adults got a margin call, and that's not an exaggeration, like I'm throwing a real stat out? Or if we got some more pain to withstand? I think that's to be determined. We've raised a lot of cash in the sector rotation portfolio. I'm up to 22% cash, so we're waiting to see. We're kind of palms up to see if the market's going to give us some indications that it's trying to bottom. One of the things I told you on the last call that I really did like was that it looks like the Mag 7 had found a bottom and started to turn up, which is great. And that had played out again last week, where the mags had gotten all the way back up to 69, only a couple of points away from the all-time high 71 in the ETF of all of them together. Here's where we're at in the mags. That was a nice, vicious bounce. The problem with that is you get Apple sucking up all the capital in the room, right? And it's so damn big that when it does it, there's just not much room for anything else. So when you got the world running and hiding in Apple because they're not spending any money on AI, it's kind of the AI antithesis trade. That's kind of what it's turned into in some ways. Maybe some unique hedging properties that I should maybe consider more. But this has become the anti-AI trade. Extended here, RSI is a little overbought, but Apple now, I think a 4.9 trillion valuation versus Microsoft at 2.9. So a $2 trillion gap has now opened up with Microsoft and Apple. Kind of unbelievable. And also at 4.9 trillion, at 4.91 and 4.9, Apple and now NVIDIA kind of dueling it out for largest company in the world. So this AI trade, guys, is really kind of at a point of disbelief, right? Where you've got Apple growing very slowly, trading at 40 times earnings, not spending any money on AI, and NVIDIA trading at 20 times, growing, anywhere from 30 to 40% annualized still, as the market just not sort of believing the AI trade. And, the multiple coming down from as high as 60, mid 60s in NVIDIA in 2022 to where we are now, almost sub 20, based on, 12 months forward. So it's really something fascinating to watch. The market kind of try to figure out what it wants to think of this AI trade. I do think some other interesting charts I just really wanted to show you. So given this BE announcement and all the announcements of data centers kind of getting shot down and power access getting shot down, my thesis of neoclouds who already have contractual power being more valuable seems to maybe have caught a bid today. So you see Iran up 16%. They have one of the largest contractual, power bases on their books. And so this would be a name that I would say, okay, maybe that is why you're rallying so hard. Names like APLD in a similar situation, Corzi. These are guys that have access to power. Hut up 11%. Cipher probably would be on that list, up 14% today. So those names coming back stronger than anything that had been nuked in the momentum trade today. Okay. So when I see, look, here we are, Iran, Hut, CLSK, Mara, there's APLD. Okay. I got Corzi here. So these are the top recovery trades. Wolf would be in that as well, MBIS as well. So that play, given the Kimi K3 news and the demand for GPUs being insatiable and there not being enough compute, and the hyperscalers having $2 trillion that they're going to spend, and there not being enough power, it makes sense that this is what's rallying the hardest today. So what you're going to want to see from these guys like Cipher is a real true break of the downtrend line, right? We're not there yet, but you're bouncing hard off the 200-day in Cipher, and you could be up through that pretty quickly here. When you zoom out, guys, a lot of these look even more intriguing on a weekly because you had this really, and I was sharing this with a direct access thread over the weekend. I was like, look, guys, it's basically now or never for Iran. You've held this several times before. What you've had is an unbelievable run up, followed by a multi-month consolidation of a huge gain. So you need to see that level hold. And similarly, I would say something like CoreWeave is at a similar position, just not quite as clean. Here you are, same sort of line in the sand, if you will. This has become, in my mind, the picks and shovel play. These guys are going to host these machines. They're going to get used. They've got power. It doesn't really matter if the hyperscalers make money off what they're doing or not. These guys should get paid, right? So this is kind of like the picks and shovel idea. But this needs to hold here with CoreWeave right now. So you're at a major inflection point with some of these. Guys, now kind of shifting into, what's working from a sector rotation perspective. This is another sign that things are gunked up. I've got some sector stuff that I really just don't like. I got commercial services and staffing, number one, oil and gas, refining and marketing, number two. We still got cybersecurity up there, number three. That's probably your hottest tech trade. Telecom still there, but retail, trucking, transport. I mean, the Bluebird bus company was the VN stock of the day on Friday, people, which interesting stock, but
that's crazy.
Kind of a very niche market it's in, but right there in the transport truck section, business equity supplies. We got managed care, computer software and networking. So this is not the stuff that I like to see leading the way. Medical services, even banks starting to creep up here. SNLs and bank super regionals cracking into the top 20. So you can see that rotation, market broadening out. That's a good sign. Good to see more sector participation. Good to see financials working. Good to see trucking working, right? It's all there, guys. Everything's there, except you got to get the momentum trade to stop getting nuked. I mean, I told Dutch that too last week. I said, hey, buddy, all we'd have to do to get this market to go up is just to get the tech trade to stop getting nuked. So, here's the other one over in VectorVest world. I got healthcare, dairy products, insurance, retail, and biotech. I mean, gag me with a 10-foot pole with that sector mix. Okay. Anytime dairy is coming to the top, I mean, what are you talking here? We're getting long cheese over here, guys. So it's an ugly sector mix, and you kind of see some interesting things though if you look a little different maybe at the 250 list. So let's go over to the 250 list, and hey, here's FA. That was a good trade. One of only few on the long-term list. We're going to take profits because I'm going to put something else on. See if we can't make some short-term profits here and give some of our longer-term names that are down a little bit of room to bounce before we start shuffling the pieces a little bit. But FA number one in the 250 list, we've got some names here you might recognize in the Energy VLO. Dino, Par had been on fire. You got a couple of names in that space. One we're going to trade today. I'm going to put this OKE on the long-term list. But you've got Hess near the pivot, ET near the pivot on a cut pattern, INSW I had featured in the wrap. That was a double bottom. So you got some energy names that look like they're set up. A couple names like Snow still kind of trying to play out in a cut pattern, but mostly energy names near the pivot right now. Got a few insurance names as well. So not a lot of really exciting stuff at the pivot, but these charts, that's not a bad pattern here with SKWD. If you've been looking for an insurance chart, probably one of the cleaner ones I see right now. But the sector mix guys, not all that great. Obviously reflective of rotation. Obviously, today, there's Bluebird. Oh, look, a little breakout from that Friday action right at the pivot. You can see the pattern, maybe up here. So starting to look for some, individual stocks that are just kind of doing their own thing. Jay Frog is the one I've been watching over in software. Here's Dave. We've traded. That's been acting really well. So, we're looking, but guys, it's not an ideal environment. We need the momentum trade to bounce and to shape up some of these charts, okay, and repair the right side. Let me give you an example. Chart like Dell, probably holding up best. One of the better boxes I see. I mean, it's a nasty box. You went from 469 to 357, but it's still high level and it's still above the 50. AMD would be another one. You're above your 50. You're in the box. So you need to stay up here. So if we can get semis to stay up here and even just for the rest of the summer, bang out in this range, not giving it any more, downside. There's the SMH. Probably need to see that low hold, 527, 536. Probably don't want to break, probably want to break that line there. So bulls are going to want to see this roll sideways for a bit if we don't have a real bounce brewing here, so that we get that correction in time and we keep the major indexes from really breaking down. But, the semis are key. Micron is a must watch, right? You just got to think that this memory trade is very, very much at the heart of this entire discussion and debate that is being had about AI and whether it's real, guys. I mean, I have read that Micron's going to make in profits what their market cap is in the next few, years. So you've got to think, if the numbers continue to come in, eventually the stock has to go up, even if we have another 10 or 15% decline from here in the stock price. So Micron will be a must-watch battleground stock, guys. Really kind of keen to see if we can at least just create a high level box. You don't have to run to new highs. You just need to consolidate higher and keep this market up to prepare it for the next leg. So those are some of the key stocks that I'm watching. All right, Dutchman, get in here. I've got Friday's position list. We can go through those, and then you can talk to me about what your thoughts are this morning.
Yeah, this is it's been tough, man. This is a tough month. We had a small number of positions coming into today, and we had so many days in a row where things were brutal that I thought that maybe what we would have today is some kind of recovery trade take place. We're getting a little bit of that in a few stocks like BAND or AXTI or Intel. We went after BE and SKHY this morning also in that group that we bought, but had to kick them immediately because they're falling apart. BE because of the Oracle stuff, and SKHY, who knows why. That'll probably come back around. But we ended up picking up like 9 new stocks this morning to add to the group, and we added to BAND a little bit, and we added to Open in a big way, OPEN. So we've got a real estate trade coming along, which is COMP and OPEN. They are 2 of the 3 top positions. And what we're playing for there is they showed us that they ripped up, from 750 to 11 or 12, 13 actually, for example. And what they showed us is that's where they want to go. And they want to break it out and they want to go, and lower rates are going to do that for them. So we're playing for a thematically lower rate regime going forward. It's not going to play out in 1 day or 2 days or a week, obviously. It's going to play out over a little bit of time. So those 2 positions should work. Right now, they're not so much.
Open's been down. Look, with Open, I got to tell you how many times this is the lower end of the range, guys. 426, right. 412, 415, 418, 445. This is you've been here in the box, and it's a lot cleaner actually, Dutch, when you look at it on weekly. You can see it there. I mean, that's a pretty good level of support right here at 4. Highly unlikely at this point that you can't get that to hold. And really, Dutch, the catalyst that you're talking about is this, 10-year coming back down again. We're back up to 459. We need this to roll over, and there's your catalyst. If you get a rollover there, back up at the high end of the range. 4594, 4687 was the last high, 4629, 48, 47, 49. So we're back up at the top end of that range, and we're making a play here. Dutch, I think all you'd have to get is for this situation in Iran to just give a crack in oil again, and you would get probably the 10-year to immediately come back down. Here's the price of oil. We peaked this morning at about 85. So you've got a decent intraday reversal. But Compass, Dutch, is actually charts a little better, closer to an all-time high here.
Yeah, so these are both really sensitive to that 10-year. So that's the play there, and it just requires a little bit of patience. I mean, over the years, we've been spoiled, a lot of us, including ourselves. We've been able to pick off some very explosive stocks, and we still do that occasionally. But I tell you, in this market, it's really hard to find a stock that gives you any follow-through. So, for example, and I'll just express my own personal frustration so that you all can understand that you're not alone, and that is that overnight, I put some thematic trades on Friday, and then when the futures start trading on Sunday, I was up huge. I took some profits on Sunday and thought, okay, I'm in good shape. I'm going to come in on Monday with a nice big monster gain to be working with. And I come in and the stocks that we have left, that I had left, are getting, they pop up and then they just get destroyed. There's no follow through. I'm off 7% in my personal account this morning. This is crazy, right? Especially since when you look at the fact that I was up huge on Sunday in there. So that swing is brutal. It's frustrating. It's difficult, and you just have to slug through it. But I wanted you to know that that's sort of what's going on in this market right now. You can be right about gold. You can be right about oil. You can be right about silver, which I was over the weekend. And then you come in and the stocks you have, like, Open and COMP and TVRD, they just beat you up and they take all that gain away. Thank God there was a gain to start with. Otherwise, it would be really bad. But I look at stocks like Band, which is our fourth largest position in the short-term trading account, and it's slightly better than break even here, slightly profitable. And I look at what's going on with the options for that and everything, and I can see this stock being an $84, $88 stock in a decent market with some follow through. And we're sitting here at 73 or 71 or 74, wherever the hell it is. And then, same thing maybe with, some of these others, AMD and Intel. We have them both now. They're both sort of flat. Had a nice run this morning. AOI, AXTI, they have good runs early in the morning and then they just bleed off. It's horrible when they bleed off like that. You get a run and they bleed off. And you get a run and they bleed off. And it's just, it's very frustrating. So I'm expressing that to let you know that, we're having a tough July. We're in a very tough July. This is one of the most difficult environments that I've traded in a long, long time. If a market is trending down, we can make money with the inverse ETFs. Can't do that here. If the market's trending up, we can rock on that all day long. We've proven it a million times. When you get a market like this, it's, an exercise in patience, I guess. And it's an exercise in conviction of whatever your themes are. So that's where we're at, guys.
Yeah, Dutch, I actually really like what you just said there because, guys, the reality is that's exactly what it is. Okay? And so from a short-term perspective, Dutch, what's challenging is as I have said on these calls, there's not enough money in the market to drive everything up. So every day is a rotating whack-a-mole, and you're probably better off fading whatever happened the day of at the close that day. So like on Friday when everything looks terrible, you literally have to get right, but you can't necessarily buy it this morning. Well, maybe you could have, but not really because it already gotten here. So you if you bought it this morning, you're basically where you're at, right? So the move happened overnight. A lot of times that happens where they're selling the gap up on the open, okay? But there's a couple of things that I see, Dutch, right now that give me conviction that the worst is behind us, okay? And one of those is if you look at single stock volatility versus the index's volatility, it's like 3 times. That's not sustainable, okay? So the volatility that I've shown you in the momentum factor, this is not sustainable, which means it should correct. And my guess is it should correct violently. But that should happen really quickly. So this week is a really important tell to me. If you can't get the semis to bounce, here after that momentum unwind, well, that's probably a sign that this market is going to correct into the midterms, guys. Okay? So if you can't get the semiconductors and this momentum trade to bounce pretty hard this week, then you probably are in a rolling correction until after the midterms at best, right? That'll give the 200-day time to kind of do this, and the market will violently gyrate. You'll get the cues, hopefully to stay somewhere in here, right? But you need these tech stocks that have been nuked to bounce. AXTI is one of those where, weekly looks kind of interesting. And the daily MACD looks like it wants to turn right here. Right? So you're on the 200-day. And look, I just showed you all those, like the IREN, the CoreWeave chart. Like, you got a lot of stocks that are down 50, 60% sitting on their 200-day. Look at UFO, the space trade. You're just below the 200-day. All the themes have been massively corrected. So you need a bounce in momentum, here. And realistically, after this kind of sell-off, this is record stuff, guys. And it happened very quickly. And some of it was driven by, the whole Korean thing has been very fascinating to watch. Come on, the number of Koreans that got margin calls, that alone is kind of just a fascinating statistic. I think, last night Korea was still pretty ugly. We're getting a little bounce today, but look, this chart looks like Taiwan Semi. MACD may be setting up. So this is, I think either you get the really snapback rally here, or we're in a correction until the midterms, and it's like go fishing until October. Okay? But when I look at the underlying fundamentals of the AI build-out, not necessarily the other themes, guys. The nuke theme is too far in the future for earnings to be properly monetized. That's not there. The space theme got front-run by SpaceX and will be determined by SpaceX. Now, you can't get a rally in space without a rally in SpaceX. So watch SpaceX. There's your tell. You're down a lot here. Trillions of dollars. It's a big company. Like 1.5 trillion has been evaporated. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 10 of the last 12 days, right? Space maybe bounces with SpaceX. Some of these other themes, though, guys, like, okay, even space is probably like nuclear in that it's ahead of the monetization. Quantum is as well. Photonics is not. AAOI just built and opened up a giant plant, and they're going to start, crushing it from a revenue perspective. IREN just announced another multi-billion-dollar deal. BE and NBIS the same, ARM the same. So the fundamentals of the semi trade and the neo cloud trade are real, and the optics trade, those are real, and they are now. I think that's maybe where the bounce comes, because the fundamentals are always there. So right now, Dutch, within the bounce trade and what's been beaten up the most, the best fundamentals are in the neo clouds, the semis, memory, and photonics. So, that'll be kind of what I look to see if it snaps back the most. We will see. Now, over in the sector rotation portfolio, all we did was sales. All I did was basically cut losers. Took some at heavy losses. They were small positions, but they had gotten, in terms of what I want to lose on an individual stock, it had gotten big enough. So it was a 2.5% position. It was down 40%. So it's out. People ask, what do you do? What do you do? Well, you cut your losers and you hang on to your winners. You raise some cash and you wait to see what starts working to buy it. Okay. So that's what we did. We sold all these names, fully up to 22% cash, much slimmer deck here. Don't know how many positions I want to add even now, unless something really strikes me. What I want to do is drive into what is here. So you may see me buy more of all of or some of these names, and I want to build some bigger position sizes. I had way too many positions on, which was fine, but they all ultimately were highly correlated to the momentum trade. I started to shift into software, but not fast enough. We had started to raise cash, but not quickly enough, and then had gotten sucked back in because the trend model didn't break down. But here we are, no real dogs left. Only one stock down, double digits. I think PER's rallying today. Hyperliquid is rallying as well. Here's PER up nicely, so that one's turning. Would love to see Bitcoin continue to turn, because I think that's a segment of the market that's really been missing and reflective of just kind of the overall appetite from retail, and kind of where it's at, just kind of in the doldrums, right? Crypto being that kind of barometer, if you will, for risk taking, for liquidity, for retail appetite for volatility. Even we're back at 65. The low was 60 and change. Trying to put in some work here to recover. Solana and others kind of in a similar ETH. So still no bull in crypto land, but waiting for some action, maybe to return there as a barometer for appetite and risk taking. All right. Those are the sector rotation moves. Look out for trades this week. If all goes well, we will be driving into some of these names. Over the long-term trades of buys and sells, I got one sell. I'm selling FA at a gain. That was last week's buy. I need to get it up on the website. We're going to buy OKE. OKE is an interesting stock, guys. Natural gas gathering, process, and transportation collects raw natural gas from producing wells, removes the impurities and moves it via pipelines, fractionates, stores, and transports ethane, propane, butane, crude oil, and refined products. Some gathering, storage, and transportation, though natural gas is the core business. Storage operates underground storage facilities and terminals. Obviously, this has become very important. It is one of the largest independent midstream operators with a heavy focus on the Williston Basin, Bakken, Mid-Continent, and Permian Basin regions. They own, operate extensive pipeline networks, processing plants, and fractionating facilities. So making a little play here with energy. Don't know how long these will last, but man, that's a good base. Looks pretty clean on a weekly. Targets 120. Diversifying away from tech, where the rest of the list is. Okay. Godfather, we're at 12:03.
Yep.
I'm going to let these fine people ask some questions.
All right. Well, obviously, we'll probably knock out a lot, and we talked about it. TVRD, concerns mostly on the volume, and then also what you think of rebound possibilities.
So TVRD, look, I think you want to stay patient. Just key in on Dutch. I mean, look, this is not a stock that has tons of liquidity. Obviously, you guys, all these biotech names, typically a few $1 billion at best. But anytime you've got what is essentially a small cap, micro cap, you're going to only have, a handful of shares a day. You had some volume come in. Dutch, you got any thoughts on what you're seeing volume wise? Did he stay with us? No. So, look, I'll probably write something up about the company fundamentally in the wrap. I don't have a whole lot of thoughts about where it's at. I would just tell you, be careful.
Right.
Anytime you see one of these come across, guys, you got to be careful as you enter and exit. I would tell you, always beware of going in size with something this small. It's just really tricky. The second question to bounces. That was the second question, right?
That's right.
So look, I think you got to go straight to what's working today, and say, okay, well, what's bouncing hardest today? And it's exactly what we were talking about earlier. I got Iran putting in a full reversal here off the bottom, hopefully going to break that trend line. Cypher the same. I've got other mining stocks like Mara and CLSK because they got access to power. So that whole power thesis obviously working. I got names like Credo that have been melted off big time, reversing hard, trading at highs of the day, right? That's a good sign. So Credo on the daily chart at the highs. APLD, another one of those hopefully reversals brewing in the NeoCloud space. Here's a photonics trade, light fuel cell we sold, but maybe rallying because of the BE news. I don't know. AXTI, one of those here again, looking to hopefully break that down. Trend line, Core Z. Marvel's one that was on the signal list this morning. I would really look to Marvel be one that I might drive into heavily here. In fact, guys, you might see me buy Marvel before Friday in the sector rotation portfolio. So I have a lot of conviction in Marvel as a stock, fundamentally, as a part of the AI trade. You know, Jensen basically said he thinks this is one of the next $1 trillion companies. Market cap is currently around 165 billion. That means it's a 5x from here, at least. I like this V-shaped bounce here. You may see me pile into this one. Other names that are coming up. Here's SanDisk. Hopefully that's reversal bluing. I got Roblox that keeps coming up as one that has already bottomed in the software space.
You're talking about Roblox?
Yeah, your son probably plays.
Yeah, well, he brought it up the other day. He said that they kicked off almost all of the independent devs off their system, and maybe that's why the stock is going up because you don't have as many chances to play the free games anymore.
Starting to monetize it better. Hey, here's MU putting in kind of a V-shaped recovery, right? That was one, guys, where I didn't really want to sell in sector rotation, but I had a tough call to make in terms of just cutting losses and raising cash. I had made a little bit of money on it once, but had not exploited that trade, and then had gone in late again and kind of top ticked it. But we'll see if it comes back. There'll be other plays. Here's a ONDS. That's one I would look maybe for a reversal for in drones, down big time. So AMD up big. Those are your leaders, right? Dave continues to act really well. Sold that off the long-term list way too early down in here. But this is where the bounce is hardest. Okay. So access to power, a couple of, AI infrastructure plays like Credo and Marvel, then a few memory names, MU and SanDisk, and then maybe some optics trades like AXTI. Light. That's what I see bouncing the hardest today. I think if you look on the 250 list.
Let's see. What do you think of Zeta, Z?
I really like this story as a stock, but it just such a sloppy trader. We've traded it successfully once or twice on the long-term list, I think. No, maybe once. Weekly looks good. Monthly not bad either. Daily, this one just puts in a lot of, like, here's the range, from 22 to 15, 24 to 14. So just seems to be kind of caught down here. Band is better in the same category. Datadog, which is on the sector rotation list, looks better as well. There's a nice cup, I think, in Datadog. So, as opposed to those two, I like Band and Datadog better. Got 99s, 88 composite. So you need to maybe get that earnings per share rating up. But those are your leaders there. JFrog would be in that software category rallying today. So, I don't see, here's Twilio, that's another one. But, you know, a lot of these charts are kind of in this weekly chop shop where it looks like, you know, they're kind of basing. Snowflake's exactly what, kind of what I'm talking about here. So I want to see this kind of breakout. Datadog, Snowflake, JFrog, Twilio. Like, give me another leg up from software.
Right.
Stop nuking off semis. And that'll get the tech trade going. And that's enough to keep the market up. But we got to get this momentum unwind behind us. And I think today and Friday are starts to that. I really do. I think you're seeing some of these really washed out names like an Iran kind of like this is trying, guys, to reverse. Look at this, you know, MACD down here. Okay.
Right.
So this is part of that momentum trade that has just been absolutely, you know, washed out. It needs to reverse. They're not all reversing together, but hopefully it's starting. Like BE, it's like, okay, if you can get all of this negative fundamental news out, and this hedge fund short story about how they supply all their materials from China, and
Yeah.
you know, it's all out there. It's all priced in. We're down 40%. We got a delay in one of the big projects with Oracle. And then they report earnings on July, 30th, and they crush it in 10 days. Well, then boom, we're going to bounce right here, right back up vigorously. And then the fundamentals will start to reassert themselves. But it needs to happen. It needs to happen this week. You need to see some of these momentum names that have just been absolutely nuked. I want to see the hardcore turn. Right? I want to see it here. And then I want to see a trend line break here. Right? Give me that real true trend line break and get right up in there. And then that tells me then maybe all this has been is just a big base. And we've reset the clock on the semi trade and some of the AI trade, right? At least just to continue to correct and base out. Because guys, remember, we had this amazing run. It was amazing. And we made some money.
Yeah.
Even though we've still given a huge amounts of it back, you're still up. It's 6-7 months through the year. You're up dramatically. The deck's been reset, right? What do? Cleanse your mind of your peak equity. Cut your losers. Find the next winners. Scale into them. That's what we're doing right now, but you got to be patient. Let it unfold. Challenging in the short term as we continue to grind out. The other stuff, you kind of just sit on your hands and let the winners show themselves. Something like Marvel hopefully really reasserts its chart this week. Okay, got any other questions?
Yeah, so one of the other ones that I wanted to touch on was Russell asked about Velo, VELO.
Yeah, I see it. Russell, great looking chart. Should have bought it down here. I don't know if was this one in the, I don't think this was VN stock of the day, but it should have been.
I haven't seen it.
Yeah, it was definitely coming up on my list of candidates, but I'm so anti. That was your point of entry. I'd maybe wait for a pullback, Russell, but this refining sector is at the top, and these charts look great in the surge system. If you look, let's see, here we are, VLO 6, Dino par, Phillips 66. It's all the same chart. All of them look just like that. See, they came out of this big base. Guys, a huge amount of oil and gas refining capacity has been destroyed in Russia. You guys following this? The Ukrainians are like slowly destroying all the refining capacity in Russia. Like the Russians they're putting out such terrible gas, it's like breaking down automobiles because the grades and quality of the gasoline they're putting out are so bad. It's really, it's for real. And you've got all these refineries that have been hit in the Middle East. So now our refining capacity is more valuable. So you're seeing it right here. So Russell, good question. And you know what? It may be powerful enough just to stay in. VLO's the top name, MPC's the top name. I just feel like you're really extended on the daily. You're at 1, 2, 3, 4, 5. And if they come in and say, hey, we're willing to talk, all this stuff will sell off. But you almost have to go into crude on a down day. That'd be my advice. Hit it on the next down day. You know, Crowd, Palo Alto, Fortinet, earnings coming up in 9 days. It's going to be interesting to see how they say things are. Right?
Z, what do you think of Coherent here? I've been watching that one, COHR.
Yeah. Hey, you know, look, I'd put this one on the possible recovery list. That's a good reversal candle on Friday. Fundamentals are good here in optics, guys. See, that's a real reversal. Thanks, Godfather, for pointing that out.
Yeah.
And let me tell you why. This is what I'm talking about, guys. This has been a great stock. It's tough to trade on an intraday basis because you can just kind of look at it. But we went from 102 to 440. You break down from 440 to 255. You hit the 200-day exactly. And all of a sudden you get this nice sharp V, right?
Mm-hmm.
So now what you want to see is this thing kind of come on up, back up to the 50-day pretty quickly, right? That get that RSI chance. You got that there. You got the MACD down here. So it's all set up technically.
Right.
So the fundamentals, are good here. That's what I would say, like with AXTI. It's like, man, the fundamentals are really good coming down the pipe. AOI, like they got some really good numbers that should be coming down the pipe. What the market's going to want to do with it, I don't know, because the market can't tell me what it wants to do with NVIDIA, who has great numbers. But what I'm saying is, man, some of these companies are going to kill it. They've been nuked. Give me a nice V-based recovery back up to the 50-day. And what you'll have done is just reset the clock on all this stuff. So I'm watching it. I would love to be able to get back into some of the names I'm already in size with some of that cash. I'm sitting in second rotation. So, we're 80% invested. We got exposure to semi. We still got, a lot of beta in there with NBIS. Hopefully BE can get its act together and help the cause out a little bit here. So, I'm watching all those names like Coherent very closely, Godfather, for potential.
Okay. Well, you had brought up BE. So BE and NBIS, you still have your longer. These are stocks I know you personally have done so much research on these companies. I mean, so you feel that there's still meat on this bone just on this longer term because we've got.
Hey, look, I think that given everything that played out over the weekend with Kimmy K3, that is super bullish NBIS. Like, it's just mega bullish NBIS. I have no idea what is going to keep this company from having just staggering amounts of recurring revenue every year that are probably as big as the market cap of it. So if you're going to have recurring revenue, even if the margins are not as projected, you're still going to have this massive recurring revenue stream that right now I just don't think is properly being discounted. And I just see NBIS as like something that could potentially be the next AWS. I'm thinking $400 or $500 a share.
Wow.
So no, I'm not selling here, guys. In fact,
Sure.
I'll be honest with you, this is one that like I might buy some more of this, even if it goes down. Like, yeah, we'll see. But B, I'm watching a little more closely because, you got this short seller. He's got this thesis out here about where they're sourcing the materials. I mean, there's some validity to what he said. I've read it. I don't necessarily like how the CEO handled it, but the backlog is unbelievable. But, if you can't get a permit to run a natural gas pipeline to your fuel cells, well, then, the whole thing's kind of gunked up. So this gets into the broader discussion of whether we are going to accept as a nation what this technology is, what its potential can be as a weapon, what the Chinese are going to do to it. If we let them weaponize it at a rate that we don't, I saw a quote from who's the real cute, tall, blonde basketball player, Sophie Cunningham, is that her name?
Oh, so is it? Yeah.
So, Sophie's out there talking about data centers. And I'm like, sweetheart, sit down and be quiet because
oh, now Dutch is back.
you are
Listen, China doesn't.
You're talking
China
about farmland. You it would cost It would cost $200 trillion to put data centers on all the farmland in the United States. Okay.
Listen,
Golf courses suck down. Almonds in California use more water than all the data centers in the nation combined. Like
Yeah.
it's nonsensical. So we've got to educate people, guys, about what these things do and what they mean. And you saw President Trump out there saying, hey, guys, these things are potential gold mines. You can't have moratoriums on them in the states of New York. It's terrible for the economy. It's bad for America. There's a little bit of that going on. So I just think a company like BE, here you are, you're providing the off the grid solution to the energy that is needed. Okay.
Right.
So you're not even tapping the grid. You're not running anybody's power bill up. You're not doing any, you're building fuel cells that are going to run off natural gas, which is abundant in the area. All you got to do is run a pipeline out to it. Now we're going to shoot that down. Oh, okay. So this is where we're at. So we've got a problem in terms of educating people about where we're at as a country. Hopefully they're going to address it, but I would like to see BE reverse. I have a little less faith in BE than I do in BIS, but I really like, guys, I'm telling you, this idea that power is the bottleneck, permanent power is the bottleneck. If that is true, then Iran should immediately turn around and run to like 70. And so should, other names like APLD and Corsi and other names. So, we're watching for things to tell us that the reversal is going to come and that we're okay. Hey, I do like what I see here from Palantir. Like, here's a name that, look at this. People have figured out that if you give Anthropic and OpenAI all your data, do you really have a company? You need something to sit in between your enterprise and these large language models that could potentially poach all your, R&D and everything, right? So Palantir is that thing that sits in between Anthropic or OpenAI or whatever model you want to use to protect your data. So this is why Palantir is coming back, okay? Because of its position in the stack and what it means. So I'm watching this one carefully. I like this action. Thought about buying it today in the long-term list, didn't, but maybe next time. So give that one a chance to recover. Look, this cybersecurity thing, maybe it has more legs. We're in there in the sector rotation. Fortinet's still holding up. CrowdStrike, Palo Alto. Earnings coming. Palo Alto looks like it wants to go to new highs. This all based on this idea that we're in this war now. We're in a coding war with AI. And cybersecurity is going to become, pretty much all encompassing because we're going to have AI chatbots attacking, military installments. Okay. So this Palantir sort of comeback, I think plays into that. Oh, look, we got SpaceX going green. That's interesting. But look, you need to see all the big dogs like NVIDIA and AVGO hold up over in the semi space. That'll keep that SMH chart from breaking down. That'll give the Intels the chance on Thursday to report and maybe get those stocks back up. Okay. So guys, this is kind of that wait and watch next day or two to see if these earnings can kind of come in and get some excitement back into momentum land and help repair the right side of the chart and the cues and give Dutch some better conditions to trade in the short term because they're tough right now. All right, what other questions you got, Godfather?
Yeah,
can I
something.
talk for a second?
You can talk as long as you want.
Okay. I want to know what meds you took this morning because you're on a roll, brother.
Hey, I've had 3 or 4 Cokes.
4 Cokes, there you go.
That Kimmy Kim 3 sent me off in a spiral over the weekend. The DA guys were getting like messages at 1 o'clock.
There you go. Well, hey, okay, so a couple of things. Number one, China doesn't want us to have the data centers, so they're working 24/7 to spread and buy off our politicians to lock this up and to slow it down. For those of you who are with me on the tinfoil stuff, they're actually doing it. It's real
true.
deal.
It's not. That's not tinfoil stuff, Dutch. That's probably
they don't want us to have it, so they're doing everything they can to buy off the politicians to stop this stuff. The fact of the matter is, as I said in the little chat room over here on the right-hand side, is we have enough land that's over the top of a hill in the desert. If you've ever driven from Las Vegas to California or back, There's so much free space out there. You can put up a solar farm and a data center the size of, the entire city of Las Vegas, and no one would ever even see it. Okay. So that's what we really actually just need to do. That's what we should do. You're never going to see any of these things that are out there in the middle of nowhere, but we need them. So now that they should just go ahead and do it. It's the reason it's being stopped is really this war with China. All right. So that's that. The more important thing here is some of you may be asking yourself, Dutch, why are we long a lot of this TVRD stock, this little tiny bullshit company? And I'm about to tell you, I just got off the phone with somebody who is very important, who is very close to this situation. And I want you to know what the story is on TVRD. So, first of all, the IR guy for TVRD is a guy I've known for a long time, and he is no slouch. It's weird to see a guy with this kind of Wall Street credentials at doing the IR for a company like this. So I talked to him and I said, PJ, listen, man, I've known you for a long time. What the hell is going on? Why are you with this bullshit company? And he said, look, these are probably the best guys at a small company that I've worked with like ever. The chairman of the board. Now you got to keep in mind, this is important because we actually traded this stock, CBay. It's called CymaBay. Okay. The chairman is Suhal Shah. That stock was at $2 a share. All right. He took that thing as their leader, okay, and got it bought by Gilead for $4.3 billion or $34 a share. So he also has a background in healthcare investment banking from Citigroup. All right. The fact that you have a management team that knows the difference between toxic financing and good financing and dilution, and who's focused on that, and has a lot of times with these science-based companies, whether it be tech science or whether it be biotech science, they don't know their ass from third base. We've experienced being involved in companies like that, where they go and they do something really stupid because they don't know what they're doing. That is not the case with this company. This company knows exactly what they're doing. This guy took a company called CBay, which was on its ass back from the dead at $2 a share to 34, and he did it fast. All right. So that's the chairman of the board of TVRD, Tvardi Therapeutics. That's number one. Number two, they have a study that needs to be financed. Okay. So the only overhang that PJ sees on this stock right now is the fact that hasn't been announced yet. I also happen to know that PJ and Suhal and they've been on airplanes the last week. I know that they are going out to people like, and I don't know who exactly, but they're going out to people like Fidelity Biotech Fund and other they're going out to good, solid biotech investors, long-term guys who want to put money in and back up Sujal. They want to back this up. The science is good. It's already proven out to be good. So Sujal's out there. There's going to be a financing is what I'm trying to tell you. There's going to be a financing. I would rather they do a partnership with somebody big and give up part of the upside on this thing, but that's not in the cards right now, okay? That's just not going to happen. I don't want it. If that happens, it's totally unexpected. So there will be an event. It'll probably have some kind of dilution to it. But when it comes to a biotech company, getting the financing is more important than the dilution at this stage. And now other companies, I would say that's not the case. This one, they're going to do a deal. It's going to be done with somebody really good, and it's going to happen really soon. Like, we're going to hear about this probably in the next week or two. All right. And why did I go into all this with you? It's a small bullshit company. It's, 10% of what our normal minimum market cap is. Sometimes there are special situations that can drive a lot of alpha. There's also a lot of there's guys out there in financial advisor world that are precluded from buying anything this small. And I get that. But that doesn't mean that a lot of us can't do it ourselves. I'm in big, I'm in large, and I'm just going to wait for the financing announcement to hit. I think this thing has already shown us it wants to be a $5.50 stock or better on that news and that announcement. So at 285 or 295 a share, I think we're at 550 to 750, but 550 is probably your first stop. I will tell you this tactically what I will do. If I got an announcement today that their financing got done and that came out and the stock hit 550 and was rocking, I'm probably blowing out of most of the stock. And I'm doing it because I got a lot, but I got way too much. But this is how you make $1 million trading. Okay, is you find a situation like this. You find guys like this that know what they're doing, and you have the patience to deal with the bleed off that's taken place from $4 and 4.5 down to 2.5, and you go ahead and you accumulate the shit out of it. Whoever's been selling this off, I got news for you, has been making a huge mistake because this is right in front of their face. They haven't done the homework. We have. This is, I can't tell you what's going to happen for sure because nobody has a crystal ball. I can tell you I've seen situations like this. I will back a guy who took a company from $2 to $34 and got it bought when he's a big shareholder himself and he's got it. We've done that with POWW also. I wouldn't be surprised to see that one do it, the same sort of thing here, but it's going to be a little bit longer over time. These biotech stocks, financing's first, bang, 550, I think. And then after that, we see where it goes. He's going to take it where it needs to go. I just wanted you to know that because a lot of people are like, what are we doing with this stock, right?
No, thanks for coming back on. It was a question I wasn't, quite frankly, as prepared to answer as you were, Dutchman. So thanks for getting back on here and clearing it up for us. Hey, one thing I would point out, guys, that I would be looking out for on a short-term chart with names like AXTI. Here you get the big bounce this morning, and then you're seeing it hold the gains, okay? So on a stock like AXTI, what you really need to see is it hold 48.50 and then crack another leg up, right? If you can crack another leg up from here, you start to maybe break that downtrend line more convincingly, right? And then you get the MACD to actually turn here. So, what you need to see in the next 2 trading days is some of these really washed out names not give up this turn and to break that downtrend line conclusively. And if we can get that, then the momentum unwind, right? If AXTI can rally and IREN can rally 20% and reverse this, well, then the momentum trade sell-off is most likely done. The Qs can catch a bid, right? Firm up the right side of this chart. And then you can get semis to kind of come back up and create the other side of that chart you need to be a base. And then, guys, what this all is a mid-summer correction that contained quite possibly the nastiest momentum sell-off that I've seen in my professional career. And that's the truth. And we've got the stats that we just shown you to prove it, whether that be the Goldman Sachs index or be that Morgan Stanley momentum factor of minus 35% in 27 years and 17 days. I mean, what we just went through was really unprecedented and in my mind, unsustainable. So if it unwinds quickly in the other way, we'll want to play it. Dutchman, that's it from anybody. You got anything else?
Nope.
Thanks for being here, guys. We appreciate you so much.
Thank you. All right. We'll see you next Monday.